Palantir's $11 billion surge. What's behind it? Palantir's stock has surged 20% in 1 week, driven by strong demand for its AI solutions. But what's behind this rally? And what does it mean for investors? We'll break down the numbers and explore the implications for the broader tech sector. Palantir's AI solutions are in high demand, with revenue growing 25% year-over-year. The company's software is used by major clients like the U.S. Army and IBM, with contracts worth $100 million and $50 million respectively. This growth is driven by the increasing need for data analytics and AI-powered decision-making. For example, a study by McKinsey found that companies that adopt AI see a 10 to 15% increase in productivity. Back in 2015, we saw a similar trend with the adoption of cloud computing, which led to a 20% increase in efficiency for companies like Amazon and Microsoft. But what about the potential risks? Some critics argue that Palantir's reliance on government contracts makes it vulnerable to budget cuts. However, the company's diversification into commercial clients, such as Walmart and Airbus, mitigates this risk. Additionally, a second-order effect of Palantir's growth is the creation of new job opportunities in the AI sector, with companies like Google and Facebook investing heavily in AI research and development. A common misconception is that AI is only relevant to the tech sector, but in reality, it has far-reaching implications for industries like healthcare, finance, and education. For instance, a hospital in the UK used AI to analyze patient data and reduce waiting times by 30%. So, what's the verdict on Palantir's AI-driven growth? Next, we'll explore the impact on the tech sector. But the part that surprised me most is what this does to your portfolio. For instance, consider how a similar surge in NVIDIA stock led to a wave of new investments in AI-focused companies. That's next, and it's crucial to understanding the broader implications of Palantir's growth. You'll learn how to position your portfolio for the AI-driven growth that's coming, and how to avoid common pitfalls that can cost you thousands of dollars. The surge in Palantir's stock has implications for the broader tech sector. As confidence in AI solutions grows, investors may start to look at other companies in the space, such as NVIDIA and Alphabet. For instance, NVIDIA's AI-driven revenue grew 30% in the last quarter, with a net income of $1.2 billion. Back in 2010, we saw a similar trend with the rise of cloud computing, which led to massive investments in companies like Amazon Web Services and Microsoft Azure. Today, we're seeing a second-order effect where companies like NVIDIA are not only benefiting from the AI boom, but also driving innovation in areas like autonomous vehicles and natural language processing. However, some analysts argue that the current valuations of AI stocks are unsustainable, citing the example of the dot-com bubble. Yet, historical comparisons suggest that the AI sector is still in its early stages, with plenty of room for growth. A common misconception is that AI is only relevant to the tech sector, but in reality, it has far-reaching implications for industries like healthcare, finance, and education. For example, a study by Deloitte found that AI can reduce healthcare costs by 20% and improve patient outcomes by 15%. Additionally, the growth of AI is creating new opportunities for companies like Tesla and Uber, which are investing heavily in AI-powered solutions. So, how can investors navigate this new landscape? We'll explore some strategies next, including how to identify the most promising AI-focused companies and how to avoid common pitfalls that can cost you thousands of dollars. And the surprising second-order effect that could change everything. For example, how Palantir's growth could lead to a surge in demand for AI talent, driving up salaries and creating new opportunities for professionals in the field. You'll learn how to position yourself for this trend and how to take advantage of the AI-driven growth that's coming. Next, we'll explore the actionable steps you can take to benefit from this trend, including how to invest in AI-focused companies and how to avoid common mistakes that can cost you thousands of dollars. So, what can investors do in response to Palantir's surge? One strategy is to diversify into other AI-focused companies, such as Microsoft and Amazon. For example, Microsoft's AI-powered cloud services saw a 20% growth in revenue last quarter, with a net income of $2.3 billion. Another approach is to consider the potential for AI-driven growth in other sectors, such as healthcare and finance. Back in 2008, we saw how the financial crisis led to a surge in demand for risk management and compliance solutions, which could happen again with AI-driven solutions. However, it's essential to remember that investing in AI stocks comes with risks, such as regulatory uncertainty and competition from established players. A common misconception is that AI is a zero-sum game, where one company's gain must come at the expense of another. In reality, the AI sector is likely to create new opportunities and drive growth across multiple industries. As always, it's crucial to do your own research and consult with a financial advisor before making any investment decisions. For instance, consider setting up a portfolio with a mix of AI-focused companies and traditional players to balance risk and potential returns. Additionally, you can consider investing in AI-focused ETFs, such as the ARK Innovation ETF, which has seen a 50% growth in the last year. Finally, we'll summarize the key takeaways and provide a clear call to action. In conclusion, Palantir's $11 billion surge is a significant event in the tech sector, driven by strong demand for AI solutions. As investors, it's essential to understand the implications and navigate the new landscape. To recap, we've seen how Palantir's growth is driven by its AI solutions, and how this trend has implications for the broader tech sector. We've also explored strategies for investors to respond to this trend, including diversifying into other AI-focused companies and considering the potential for AI-driven growth in other sectors. So what's the next step? Take a closer look at your portfolio and consider how you can position yourself for the AI-driven growth that's coming. Remember, this is for education, not financial advice. Talk to a fiduciary for your situation. If this changed how you think about AI stocks, hit subscribe. I break down one of these every week, and I'll provide you with a free resource to help you get started with investing in AI. Additionally, consider taking the following actionable steps. Review your portfolio, research AI-focused companies, and consult with a financial advisor to create a personalized investment plan.